the price component of inflation that is often correlated or confused with the denomination of inflation is that prices going up are or is inflation. And of course, that's not.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And on today's episode of the show, we're going to be digging into a new book that is on the verge of coming out called The Real Truth of Inflation by Jess, who is an off-grid author who is trying to get an important message out, likes to preserve his anonymity to a degree, but certainly we've been talking over the last couple of weeks, and he's a student of Austrian economics, and a lot of the concepts that go along with that certainly we're seeing play out in today's world. And fortunately, he's joining me here today to dig into some of the more complex things that are happening. And Jess, it's great to have you on the show. And how's everything going with you today?
Going great, Chris. Thank you so much for having me on. I've been a fan of your show for probably about a half decade, so it's a real honor to be here.
Well, I appreciate that. And certainly as we've been talking via email and then over the phone, you have a good background in Austrian economics, and you've studied a lot of these different concepts, least of which would be inflation, which people who maybe haven't thought about that as much are getting a firsthand primer of when they go out and buy things now. And perhaps we could start there. One of the chapters you mentioned is everything you never wanted to know about inflation and debt. And why don't you just take it from there and some of the things that you feel are important for people to understand at this particular time?
Yeah. One of the characterizations of inflation that is often, and I think viewers of your channel are going to be a lot more wise to than others, but the notion that inflation and prices are somehow synonymous, that they are one and the same. And of course, as those versed in any measure of Austrian economics or the metals community as a greater whole knows that inflation is, as we like to conventionally define as, is an increase in the quantity of the currency supply. Now, the definition has changed because we no longer use money as our base case of media of exchange. We use currency, fiat currency, and we acknowledge as having a standard of value that we are able to thus operate some medium of exchange in transaction in the greater economic environment. And the price component of inflation that is often correlated or confused with the denomination of inflation is that prices going up are or is inflation. And of course, that's not. And so one of the first barriers that I try to break through in the book is to really hone in on why the discrepancy of definitions matters, why it's important, why it's necessary to know the difference, and how knowing the difference really empowers you as the individual, which is the whole concept really of the book, is to make the individual an individual. Again, we live in a world that has become so collectivized due to kind of the globalization and globalism of the modern 21st century. And aspects of individualism have been lost. And so the importance of being able to identify particulars in definitional assignments of words and meanings really hones in on the empowerment component of why knowing the difference makes you more able to be capable and probably prosperous at some point in this world, assuming that the central banks don't move further to the central banks and the governments don't move further towards a measure of control. And so inflation, as I said, is basically just a pure and simple, just an increase in the quantity of the currency supply. And doing so causes the value of the currency itself to shrink, because as you increase the quantity of anything, the value of it inversely correlates downwards. And so when you increase the quantity supply of the money or the currency, the purchasing power drops. And as the purchasing power drops, the prices that we denominate the value of things in must inversely also rise. And so that kind of gives us basic understandings of inflation. But when we see prices go up at the pump or in the grocery store or wherever, we just say, oh, that's inflation. And in a way it is. And I think Peter Schiff, obviously a lot of the people on this channel and your channel know Peter Schiff and his view on economics. But I think one of the common ways that he likes to make a similarity of prices and inflation is that prices are inflation is like water and prices are like a sponge. And as you increase the supply of water, the sponge gets bigger to soak up that currency. And so even though we walk around and kind of say, oh, everything is inflation, and we use these terms that kind of just, we all kind of go, yeah, I know what that is. I think it's really important for the individual to understand the value of knowing the meaning of why what is happening, and to be able to really make a distinctive difference in their own mind and in their own life, so as to then not just go out and say, okay, what do I need to do because prices are rising? Someone please tell me what to do. Instead, you have a very calculated understanding of what is occurring, why it's occurring, and what the correct steps are in response to it occurring.
Yeah, that makes a lot of sense. And obviously, I agree with the Austrian definition that it's the increase in the money supply that's the inflation. And then the effect of that is that we see prices rising. Although I guess what you just mentioned, a great place to go next, where given what we've seen happen, and now that prices are higher, what do people do in response to that?
So I think that really boils down to the type of economic system and structure that we exist under. Under normal, sane economics, the right answer is not what the answer is today. And we live under this Keynesian central plan, central bank, debt-based system. And the right answer for what makes sense conventionally may not be the right answer. And so conventionally speaking, the right answer in an inflationary environment would be to reduce your spending, to increase your productivity, theoretically to increase your taxation, to offset any debt load. Because if you're running a debt as a government, and you, or even as an individual, and you have a significant load of that debt, the only way to manage it, I mean, yes, you can reduce your spending, but that's just going to slow that train. It's not going to stop it and reverse it. So the way that you reverse it is to increase your taxes, right? You increase your taxation so that you increase the flow of income that's coming into your bank account, essentially, whether you're an individual or a government, it doesn't really matter. The understanding is essentially the same. But in today's world with Keynesianism, those answers don't really seem to apply. It doesn't, even though, common sense demonstrates that we should do all of those things. The answer, as we've just seen with Congress, with the Inflation Reduction Act, is that to reduce inflation means to spend more, and cut, right? So we spend more, we make less, and somehow that's going to bring prices down. And to answer your question, I don't know. I mean, if this was not an upside down, backwards, inverted world, I would say cut your spending, increase your income, increase your productivity, and just try to be a little bit more equitable. And at the same time, also, invest in things or acquire things that are not so. Mises, Ludwig von Mises, the kind of technical father of the Austrian school, he's very, very adamant about the difference between consumption goods and production goods. And one of the things that we often see in our personal lives is that we acquire a lot of consumption-based goods, and we don't tend to manage our existence around production goods. And so I think, the answer to your question would be to stop consuming so much in the meaningless things, going out and buying a can of soda, and instead go out and, it sounds ridiculous, but go out and buy some lumber, something that's going to hold some value and has some applicability of use to it, other than a one-time consumption component that just momentarily satisfies and at the same time also dries up your bank account and also puts money into the corporate conglomerate machine, which is then used to fund lobbying and all sorts of corruption in the congressional side, which then gets us to things like the Inflation Reduction Act.
Yeah, it doesn't seem quite like the Inflation Reduction Act is, at least in my opinion, going to be the solution. Although I guess you were mixing in a bit the governmental level and the personal level. For people out there that are trying to respond to this, I guess, where do you see it heading now, where I guess a couple decades, depending on how long someone's been following this, it seems to me governments are going to continue to spend money, Fed hike rates aside. At some point, they'll continue to print money. Where do you see it going from here? It's not an ideal situation now, and it doesn't seem like we have someone coming along on either the government or central bank level that's, I wonder sometimes if they're even genuinely trying to make it better. But where does this go from here?
It's really a complicated question. There's no one answer. Unfortunately, it has to be kind of attacked from a multitude of sides all at once. And the problem with it is that there's so many components that are not only going in one direction that is the wrong direction, but they're going in that direction at high speed. So you have your governments going in their direction. You have the central banks going in their direction. You've got Wall Street and the corporate structures moving in their direction, and they're all feeding each other to maintain. And then whether as you said, you sometimes wonder whether or not it's intentional. I think it seems intentional, but it's also, I think it's kind of a survival mechanism of maintaining what, if you exist as an entity, that you want to continue existing. And these organizations, whether they be governmental or private or otherwise, they want to continue existing. And so where does it go? I mean, the system, as Mike Maloney said, I think it was in his video, The Case for $20,000 Gold, is that the whole system needs to continue going further and further into debt indefinitely and exponentially, otherwise the whole system implodes. And he had a little visual graphic depicting the component of interest attached to every debt note of fiat currency that the central bank swaps for bonds from the government, and how that interest becomes, it starts out as a small portion of the total, and then grows exponentially into perpetuity forever until it becomes unmanageable. And to extinguish the debt leaves you with just interest that cannot be paid. And so where does it go? I mean, Mises in his theory of money and credit talks about how every monetary system that is replaced always comes first with a form of inflation, so a form of depreciation of that currency system, and that the way that the governments generally tend to introduce new methods of medium of exchange is to first devalue the existing one. And as we're seeing, that's what's occurring. Mises also goes on to say that the governments cannot force a specific means of exchange or a specific money or currency onto the people, that in order for it to become adopted, it already has to be an existing circulating means of exchange or currency that's already pre-established. So that begs the question as far as to where it's going. Well, I mean, we talk about central bank digital currencies, and that seems to be the logical direction in this Keynesian world. If we're going to ever turn this ship around, it's like I said, it's coming at it from a lot of angles, and it depends on what. I think you have to get general mass consensus from a larger number of people than the few 535 congressional members of 536 if you include the president. So you've got Congress and the 9 Supreme Court justices and the president. You got that whole component of that agent of government. If we all defer to them, where it's going is where they tell us it's going. Essentially, I mean, we tend to vote them into power so that they'll make decisions and choose directions for us. And do we really want to be beholden to 536 individuals or whatever the number is to make decisions for 330 million of us? We gotta figure out how and where we want to end up. And I think that if we continue on the path we're going, we're going to get more of the same. And we're going to basically, kind of get that Einstein aphorism of, I do not know which weapons the Third World War will be fought with, but I know which weapons the Fourth World War will be fought with, and that's sticks and stones, and because there won't be anything left. And there's a chart out there somewhere that depicts the debt to GDP of the United States, or maybe it's the global debt to GDP, but each of the pinnacles of those debts to GDP results at World War I, World War II, and the predicted debt to GDP results at World War III. And I would really hope to see that we don't end up there. But if we continue along the path that we're going, I don't know how we avoid that. And as we're seeing with Russia and China and everyone trying to kind of break away from this American-controlled fiat standard, I don't know what the United States as a government will do. What we as a people will do, that I guess we have to determine that individually.
Yeah, I think that's the tricky part, especially you mentioned seeing some of the countries in the East seemingly growing tired and frustrated of a lot of these policies that have been going on for a while. Do you think I guess you answered this in a sense, but maybe you could expand on it, whether we're headed towards that sort of divergence? Certainly it's been building throughout the year. And I'm curious how you see that playing out as countries are now overtly trying to de-dollarize. I mean, there was a period of time where, we'd hear Gaddafi or Saddam Hussein talk about doing things outside of the US dollar, and often they seem to get punished pretty quickly. Now it's almost as if there's someone who's able to stand up to the bully, which makes me take notice. And I'm curious how you see that playing out right now.
Yeah, I think the Gaddafi and Saddam, and boy, I'm blanking on the rest of them, but I mean, we've been in the Middle East in every country trying to control everything that goes on over there, because they don't really have the means. And of course, the ones that potentially did have the means, the Saudis, we co-opted with them in the 70s with the petrodollar, and basically made them our ally. We, promising them the denomination of oil globally in dollars for essentially what equates to free access to cheap money, as well as the protection component of supplying them with all sorts of military hardware and equipment. The rest, as you said, I mean, the rest of the world now is standing up to them, and that there is someone that can. I don't think the United States as a government is, I don't know that it's not that they're not aware of it. I think they're so accustomed to being used to nobody being able to stand up to them that they're not taking it seriously in the way that they should be. Maybe they are, maybe they aren't. I'm not in the inner spheres, and none of us are. But I think that at those upper echelons of government, they tend to think that we are an impenetrable, unstoppable force that no one can mess with, because we've got 11 aircraft carriers, and we've got, a fleet of whatever it is, 3,000, 3,500 fighter jets, and all and all, on and on with the military component of it. And that somehow is, the hubris of that is not dissimilar to the British in the Revolutionary War, where, they believed that their military might could outlast anything. And of course, we saw what happened. A few kind of stoned out farmers were able to kick their ass. And how and why is really an economic based question rather than a military one. And so when it comes to Russia and China, they don't have to fight. They don't need to use weapons. They don't need to launch missiles or do any of that. All they have to do is turn off the spigot, right? Because they supply everything to us. They supply all of our fuel, all of our food, all of our resources, all of our commodities, everything. They control everything. And so we think we're sanctioning them. They're going to all they have to do is just say, okay, switches off and good luck. And then what? That we've outsourced every element of our productive capacities to them. We've threatened them with violence of war, and then they're going to turn around and say, "Oh, I'm sorry. Can we acquiesce to you a little bit more?" I don't think so. So, for what they are going to do, and especially their monetary system and the monetary side of it, they don't need to transact in the dollar anymore. Why would they? I mean, it's a pointless endeavor for them that they end up losing on the back end of that, recycling into treasuries that are losing interest at 6% or whatever the inflation rate is. I mean, the real inflation rate, 20%, because you have to look at the total inflation of the dollar since the inception of the Federal Reserve in 1913. And so if you're looking at 96% or 98% devaluation of the dollar since then, I mean, what is that? You're talking about hundreds of percent of inflation. So the real purchasing power that we've basically asked for slave labor to produce infinite supplies of goods and services to the United States from every other country in the world. We've threatened them at the tip of a spear if they don't do it. And then we've told them that they have to transact in our currency and lose a whole bunch of purchasing power on the back end. Why would they? It doesn't make sense. And so they know what they are. Russia knows full well what it has in terms of its commodities. China knows at 1.3 billion strong, it can make whatever it damn well pleases. They don't need us. So as far as the productive capacities of the economic sphere and the monetary side, I'm surprised they've waited this long, to be honest with you. Doesn't make sense to me.
Well, it's been building for a while, and sure enough, we're seeing it escalate this year, and certainly something I think everyone is keeping an eye on, and not the greatest trend. Just one thing that we talked about before we hit the recording button that I think would be good to include in this call today. You talked about how in 2008, following the QE programs, I mean, we saw prices rising, but perhaps not to the degree that many, myself included, expected. And I was thinking perhaps you could touch on that a bit.
Yeah. So the component of quantitative easing from the Federal Reserve and all of the central banks, I mean, all of the central banks around the world definitely increased their quantity of their currency supply after 2008. You see going on in the Eurozone, they have obviously had their interest rates in negative for a long time. The Bank of Japan, you look at that. China obviously has had their interest rates low. They've just been cutting them recently as well. But the whole quantitative easing component was that the cheap debt, and we have to kind of understand that debt and money in today's world are synonymous understandings, that there is no real money, and that debt and currency are basically equivalent understandings. So when we say cheap debt, we basically mean cheap money, and debt is money in this current world. And how that works out is the whole treasury bond note, circulation with the Federal Reserve. And it's a little too complex to go in there. But as far as the quantitative easing side of it goes, they basically they're lowering interest rates to zero, right? So you have 2008 interest rates go to zero. Why to zero? Well, so the reason for this is because that makes access to capital, loans, borrowing money really cheap for big corporations, governments, anybody that's got debt and needs to borrow more to finance whatever they've got going on. Well, if they can access that at no cost to themselves, they can borrow whatever they need in whatever quantities, that you can just do so exponentially, again, in perpetuity, for the purpose of acquiring whatever you need to pay your bills. And the other side of this quantitative easing component that most missed, and why so many expected inflation to become a thing when it didn't, is because all of that cheap debt, the only individuals that qualify for the debt in the quantities that the Federal Reserve and the central banks we're willing to give. And when we look at the balance sheet going from 800 billion to basically 4 trillion, and you think, okay, how do you get to that level of balance sheet if that money is not circulating in the real economy? The only individuals, and I use individuals in air quotes, the only agencies eligible for that type of those quantities of debt are your big banks, your big corporations, your Facebooks, your Googles, your Amazons, your Apples, your Walmarts, the big, your Coca-Colas, whatever, the big giant corporations that have the leverage of capital to walk into whichever bank or operative money lending institution, essentially, to warrant the justification to acquire those loans at cheap interest rates. And when they do so, they're not taking that money. At least in 2008, they were, I don't know the balance sheets and the financials of every major multinational company, but they weren't hemorrhaging cash the way that we like to think that the 2008 caused the rest of us to suffer. They were probably doing okay, and they had access to cheap debt that was exponential in terms of what they previously had ever known to be possible. So they take that money, and instead of building out their infrastructure and paying their employees higher wages or developing research and development and going on above and beyond what they could be, which is theoretically the concept of free market capitalism, is that you want to have the whole concept of free market capitalism essentially is that you build, as Peter Schiff, again, I love Peter Schiff, he says that you build a better mousetrap than your competitor. So you build a better product for less money, and the only way you're going to do that is to invest in yourself. Well, these companies didn't. They took all this cheap debt and they bought back their own stocks, right? You have your stock buybacks, and they're leveraging capital against the share price of their companies to inflate their stock price. And when I say inflate, I mean inflate the way inflation inflates. It takes the price, and you have more currency chasing the same amount of goods, assuming that they're not increasing their the number of shares in their their capex, basically. Well, if you have the same amount of shares and more currency, it's going to drive the stock price up. And of course, that's what we've seen since 2008. You've seen an exponential rise in the stock market. And the reason that you've seen that is because all of that cheap debt that came in the form of hundreds of billions of dollars from the central banks didn't circulate in the real economy. It circulated in the financial economy. It circulated on Wall Street and the stock market and the bond market. And it stayed confined inside those entities until 2019, until the repo market disaster, essentially, when the liquidity crisis of the repo market basically said, hey, it's fired a warning shot across the bow and said, hey, you actually do have a liquidity issue, and you have misallocated your capital, not in the infrastructure of your own corporation, your own business, in the economy, in the actual real economy. You've leveraged to the hilt debt to inflate your own share price, to make yourselves to enrich yourselves or enrich your own company or your investors, and a few individuals benefit at the rest of us. But when it comes time to actually produce a sustainable economic structure globally or nationwide or however each agency of actor, whether it be the United States or Japan or China or whatever, how they each function economically speaking, well, we took a whole bunch of money and invested it in the wrong place. And then when it all failed, we kind of all looked at each other and said, I don't understand what's going on. Why is this not working? Well, it's duh. So the repo market, sent that warning shot across the bow of the liquidity crisis. And then, of course, the central banks need a good excuse to pump currency into the real economy this time, because it's the only way you're going to keep the consumer afloat to go out and be able to buy the only elements of what's going to keep the corporate side afloat now, because the stocks can only rise as long as there's a buyer. And once, you can run that game indefinitely, I suppose, but to what end? So, the central banks and the governments needed an excuse to pump liquidity into the real economy, and you get COVID. And, whether it be, whether that be a conspiracy theory or not, it's coincidentally timed, and you get $5 trillion additional dollars pumped in with, here and there a little bit more every now and again, to prime the pumps to keep it going. But whether or not COVID was timed illegitimately or honestly, whether it actually occurred or it's not my place to say. But it just it reeks of the rest of the if you look at the whole story from the beginning and the inception of the Federal Reserve all the way up through it's par for the course. And so I don't know if that answers your question. It's the difference of the financial inflation versus real inflation. Hopefully it clarified a few elements of it, though.
Well, yeah, I think so. And certainly it's complex the way the whole thing has gone down, although I appreciate you shedding some light on that. And just perhaps before we wrap up, anything else that you feel people be well served to know, or any thoughts about the book that you have coming out shortly?
Yeah, and then it's not easy to do in a short amount of time. I think one of the things that I really emphasize individuals to do is to look up the Nolan chart. That's NOLAN, the Nolan chart. And the whole concept of the Nolan chart is to really identify right there. That's perfect. And if you look closely at the quadrants, there's 4 quadrants. And it is turned on an axis 90 degrees. So we're looking at a square on a 90 degrees axis there. But if you look at it, it's economic and personal liberties and economic liberties, and personal and economic security. And if you identify where each of these structures falls in the Nolan chart, you'll realize that horizontal center line is basically the do not cross line. And everything below it is everything theoretically, historically, that we as Americans, as what we like to think the rest of the world since the fall of the Soviet Union and potentially the end of World War II has tried to veer and steer away from. And if you identify that center line, you'll notice that you've got your modern Republicans and your modern liberals on the left and the right there, and you've got your centrists in the middle. And one of the things that, as we were talking about before we started, was that in present day language, we often refer to the United States as a democracy. And if you notice, the democracy icon there is directly below the center point in the chart. And democracies are not, well, first of all, it's not what we are. We are a republic, theoretically. The United States was formed as a republic. Benjamin Franklin is well known for saying that he, what form of government have you given us, Mr. Franklin? And his response was a republic if you can keep it. And so the concept of a republic is vastly different than that of a democracy. And if we tend to use words, and words are our only means of communication, really, if we start to assign meanings to words that they don't have, we tend to lose sight of what it is that we're actually saying, and communication gets lost. And so if you look at this chart, it's really, one of the most common things that we hear is the use of these terms: socialist, communist, fascist, democracy, republic, conservative, liberal, whatever. And what they really mean, when you look at it, they're not political terms, they're economic terms, and they fall under economic structures of systems that are employed in certain ways to enforce and to produce these types of liberties, whether they be economic or personal or wherever or whatever. And where they fall on the chart really depicts what type of system and what type of belief structure of economics you identify with. And so a great example that I often like to give is that if you are opposed to Nazism, and theoretically everybody on this planet for the most part generally is, right? We think of Hitler and we go, yeah, not a major insightfully positive individual that I tend to look toward as being an idol or a figurehead that I want to aspire to be, right? So Nazism we revere as this horrifying understanding. And then if you look inversely to it, you've got socialism. on the opposite side of the quadrant. So the economic quadrants, oppositionally speaking to one another, hold the same space, just in different spheres of the same understanding. So if you're opposed to Nazism, you're opposed to socialism, you're opposed to communism, you're opposed to fascism, you're opposed to democracy, because all of those understandings exist below that horizontal center line. And what a lot of the people that advocate for these systems really don't understand is that they don't see it through the lens of economics. They tend to see it through the politicized liberties of what they want them to mean instead of what they actually mean. And so these types of things really dictate where the financial sectors go and how economies and governments employ their economic components and direct their economic systems. And so what you get in socialist economies are central banks. So central banks and socialism are basically synonymous. They cannot exist without one another. And so you think, okay, we have this central bank that runs our system. Do we live in a republic the way we're supposed to, or have we devolved not only beyond the democracy position, but then really kind of moved even further? It's a question for everybody to kind of analyze, I think. And that's, for me, it's the most important starting point, is where on this graph do you fall? And then from there, what decisions do you need to make to go, if you don't like where you've landed, what decisions do you need to make to go where you want to be, or theoretically think you want to be? And so for me, the most important component of that is the elimination of centralized power and centralized governments dictating basically all aspects of life. And every individual, it's different for them. But for me, I look at the starting point of the United States as a republic, and I try to go from there. And I think that part is one of the most crucially lost elements of our modern intraday dynamics when we communicate with other people.
Well, that makes a lot of sense. And again, quite a body of knowledge you shared. Jess, can you just let folks know where they'll be able to find your book? Certainly a lot of expertise and knowledge you have there, and how can they find that?
Yeah, I am trying to get it up on Amazon. It's going to be self-published for the time being. And it's going to be titled The Real Truth About Inflation. It's really close to being finalized, and hopefully going to have it up on Amazon in the next couple of days here.
All right. And as soon as that's up, we'll have the link in the description field below. So Jess, appreciate you joining me. Appreciate you writing all these things down and studying them, which hopefully will help people have a guide through some of the challenging times that we're facing out there. But thank you for all that you're doing and for checking in today.
Thank you so much, Chris.
Well, thank you, Jess. Sure appreciate everything that you shared there and that you put into your book. Certainly inflation, a complex topic that unfortunately we're all learning a bit more about now. So it was great to get your insight and have you on the show. Also, thank you to everyone watching at home. And thank you to Raina Silver, who brought us today's video. Raina was recently part of a Red Cloud webinar where they're talking about their project, and there was an interesting clip they posted from Lauren McGaw, who was part of the project, about how they're finding gold in their project at Batopilas as well. And we'll play a minute of that now.
The bottom portion, the southern portion of this district, we know that's high-grade silver. We went up into the northeast zone where we found gold. And this isn't just we found a little bit of gold. This is at hole 42A, for example, we found 3.65 meters, running just over 8 grams per ton gold. And what makes us excited as explorers is that you have this silver mineralization in the southeast, or in the south. And we have this gold mineralization that just showed up in the northeast. And we have overlap in the middle, and they're taking advantage of the same structures. They're not temporally in the same spot, but they're both there. And that allows us to have the potential to leverage the silver mineralization to find more gold mineralization, and the gold mineralization to find silver mineralization.
Again, that's courtesy of Red Cloud. And thanks again, everyone at home watching. Hope your week's off to a good start, and I will see you again tomorrow.